I go to my guy who was handling my tax returns because he's a CPA, because I trusted him.
Yeah.
And he just said, hey, you make money, you pay taxes. And I said, that can't be right.
No, you can't do that. You can't do that. You can't do that. And also, you need to actually think about paying taxes. What are you talking about? Like, this makes no sense.
He told me if I didn't pay those taxes, that I should never vote again.
I'd be fine not voting if I didn't have to pay taxes.
The coolest thing about making a bunch of money is you get to decide where you put it. Yeah. And I always tell people, if you get audited and they don't find anything, you're overpaying in taxes.
Yeah.
But if they say, you know what, you are super clean, bro.
Clean,
good job.
Dude.
That means you overpaid, dude.
Yeah.
They're like, we found it, boss. He's way paying over. Just leave him alone. Leave him alone. Let him do what he's got to do.
Yeah. What's going on, everyone? Welcome to another episode of the Wealthy Way podcast. I'm your host, Ryan Pineda. Today, we're going to be talking taxes and how to save money. You guys know I don't like paying taxes. I don't think anyone does.
No one does.
And there's actually ways that you can make a lot of money without having to pay taxes or pay very little in taxes if you just do the right things. And so today, I've got a tax strategist on the show, David Perez. Happy to have you.
Hey, man. Thanks for having me. This will be fun.
Yeah. I instantly recognized you. Like, you're very recognizable.
Man, I stand out, huh?
Yeah. You were at WealthCon and I saw you walk through the hallway. I'm like, oh, dude, you're back. You must have liked it.
It was really good. You did put on a great event. So many people, excitement, a lot of energy. It was really cool, man.
Yeah, I appreciate that. So first thing that you were wearing that made me notice you was the BYOE. What is it?
So Build Your Own Economy. It's the title of my own book, my first book. And what it really means is it's about independence in a world today that is set up to keep you independent by our government, the school systems. Basically, everyone is trying to say, hey, it's going to be okay. Life is good. I think it's our right to build something that's unshakable, something that we can manage ourselves.
Got it. So as a tax strategist, like how do you incorporate that?
Well, I think that, what I really help is a lot of rich people. So rich people make a bunch of money. And the challenge is that rich doesn't equal wealthy. So you can have a bunch of cash, right? But cash by itself, and most people, like, I'm going to imagine, because I went through this, I'm pretty confident you went through it, is you're working really hard. You're busting your butt, you're grinding, you're pushing, and you neglect to focus on the things that really could matter, which is your finances, your cash flow. I mean, you just see your bank account growing, and then April comes around, right? And then it's like, wait a minute, how much? Wait a minute, how did that happen?
Yeah.
But it's not because you didn't know it was coming, it's because you're too busy focusing on that. And so the Build Your Own Economy concept is like, how do I get people who are making a bunch of money, who built something really strong? How do I get them to start thinking about building wealth? And this ties in really well with, Wealthy Way.
Yeah.
Because that's the truth. Many rich people today, I call them rich because it's a rich trap. People get trapped thinking that their rich is going to last forever. But money doesn't last forever. You've got to make that money work for you.
Yeah. Your money has to always be growing. Like, there's this kind of like myth of like, you'll make it at a certain amount of money. Oh. And it's like, no, dude, every time I make more money, I'm like, dude, I don't have enough because my lifestyle increases.
That's right.
I put it into investments and then I'm cash poor. And then I'm like, hey, I got to make more money again. And then I got a big tax bill because I made this money.
Yep.
You're just like always in this cycle of having to make more money.
Yeah. And anybody who says that they have enough money hasn't made a lot of money. Because if you make more money, it becomes very easy to use it. And by the way, I don't think it just has to be blown. It's a lot of investments, like you mentioned, cash poor because you went into a real estate deal.
Yeah.
You invested in something. You bought into a company. But most people don't see it that way. They're like, I just need enough cash so I can live. Well, that's kind of like not the people that will ever be wealthy. No.
And also too, even if you did have enough money for, the personal things you want to do and you're happy with all your investments. I mean, like for me, philanthropically,
that's right.
Like I got to make a lot of money to do some big things. There's no other way around it.
Yeah, actually, I mean, I heard you speak at WealthCon rather, and you were talking about all the things that you want to do, your ambitions, your goals to give back. And I feel the same way. I think the coolest thing about making a bunch of money is you get to decide where you put it.
Yeah.
And I think that there's a lot of people in the world that don't believe that they have options. And I think if you make a bunch of money, you can say, I want to give to my church. Yep. I want to give to this charity, or you can start a nonprofit. We have a nonprofit that feeds families. Our goal is every year to feed 5,000 families during Thanksgiving. Yeah. In our local community. And we've been doing this for the last 9 years.
I love that.
And but I did it when I didn't have money.
Yeah.
Right. And so today it's even, I'm not going to say it's easy to do it because it's never easy, but it feels even better today to not worry about a lot of things and say, hey, we've got this. Let's do it.
For sure. So let's talk about some tax strategies real quick. And then we'll kind of get into your story. But what are some things that you're advising people like me? Like what are you telling me I need to be doing?
Well, first off, I start with asking, who currently do you work with? Because the majority of people we encounter on a daily basis, the rich people, work with a CPA or a tax professional who doesn't really ask them the right questions, isn't proactive, more reactive. They come into the scenario mostly fourth quarter or first quarter when the problem is already too big to handle, right? You can't, there's only so much you can do in December, and there's really not very much you can do in April.
Right.
So a lot of the times it's like, who's working with you now? Have you outgrown them? Because that's the typical thing we find is people outgrow their current accountant, and they outgrow them because I like to compare it to like sports cars, right? Do you have a sports car?
Yep.
What do you drive?
Porsche Taycan.
Okay. So a Porsche, right? So what does your accountant drive?
Well, I own a CPA firm.
Oh, that's true, right? Okay. What did your previous accountant drive?
Oh, I don't even know.
It was probably a Toyota Camry, right?
Yeah.
And so most people drive a Porsche.
Yep.
Go to their CPA who drives a Toyota Camry. Nothing wrong with a Toyota Camry. It's a very reliable car.
Yeah.
But they have no ambitions of making wealth or being wealthy or saving money because that's just not their strategy. They don't have a wealth strategy.
Yeah.
Their strategy is just
I'll tell you too, like my accountant before I started my own firm, this was back in like 2017. That was like 2017 was the first year I made some real money.
Okay.
I made $750,000.
Nice.
And I was like, dude, this is crazy. And so like, I'm telling him all these things I did and like different expenses I should take. And I didn't know much about accounting or tax or anything, but he's like, no, you can't do that. You can't do that. You can't do that. And also, you need to actually think about paying taxes because it supports
because you made money. Made money.
And I'm like, what are you talking about? Like, this makes no sense.
It's backwards, man. So if you find out if you give your keys, or you're given the keys, which is your business, your lifestyle, your money, of your high power performance machine to somebody who drives a Toyota Camry or something, they don't know how to handle it. They don't know how to handle it. But what you just said is very important to understand for most people is that if you're giving them advice and you're asking them to do things, then they're probably not the right person for you anymore. It happens more times than other. In fact, my epiphany for this was back in 2015. I've been in the tax industry since 2008. In 2015 is when I had my first big year. I had $140,000 tax liability. Mm-hmm. And at the time I was doing just tax preparation, which it's a different type of tax, right? There's compliance and there's strategy. And so I come to the epiphany that, whoa, I got to pay all these taxes. And my epiphany was I need to figure this out, right? So I go to my guy who was handling my tax returns because he's a CPA, because I trusted him.
Yeah.
And he just said, hey, you got to pay that. And I said, why? And he goes, that's just how it is, man. You make money, you pay taxes. And I said, that can't be right. And then I'll tell you this, because this is extreme. What he told me is if I didn't pay those taxes, that I should never vote again. I swear, and I mean, I'm saying it a lot nicer. I'm saying it nicer. That's how he said it to me. And that's how it is. You pay your taxes and you get to vote. But if you don't pay them, don't think about voting next election. I was like, damn, that was strong, bro.
Well, I'd be fine not voting if I didn't have to pay taxes.
Well, today that's easy to say, right? I don't even want to vote. You build your own economy, man. You don't need to vote.
Yeah, exactly. Exactly. So obviously, like number one tip is, hey, who's currently doing your taxes and everything? Like, just look at their lifestyle, their career, their investments, and if it doesn't align with where you're currently at, then probably not a good decision.
That's exactly right. Because most of the people that we're talking to are what we call hyper growth people. They're growing 40% year over year. They have this trajectory to go very big and far, and they realize they've been working with this wrong person. And and they're not a bad, by the way, the CPA or the tax professional they're working with isn't a bad person. They're great people. They know what they're doing. They're competent, they're capable, but they're not proactive. Right. And so, you're overpaying. I mean, people would say, well, how do I know if I'm overpaying? Well, have you ever been audited? Have you been asked any questions? Because that means you're overpaying.
Yeah. Right. So what's another thing that you see rich people doing that maybe others aren't?
Well, I think there's a lot of structure involved in things. So I think there's 3 pillars to the way you do a tax strategy. Number one is asset protection. And that ties really well to kind of entity structure, you an S Corp, C Corp, sole proprietorship, partnership. And also, do you have trusts or anything in place that could manage those things? The next part is the actual tax mitigation, because once you get the foundation of the asset protection, And that also presents legal stuff in the future. And then you get your asset protection. You move into tax mitigation is how do you put those tax strategies in place? And a lot of it starts with accounting. A lot of people don't understand that your bookkeeper plays a vital role in this.
Yeah.
And they don't think that. They're like, oh, my CPA handles it. But your CPA doesn't probably do bookkeeping.
No.
So that would be the next thing.
I tell people that all the time. I'm like, look, if you can't give me a P&L right now, you're messing up.
That's right. That's right.
Because you don't have books. Like, how do you know what's even going on in your business?
Yeah. Or a balance sheet, right? How much do you owe? How much do you have in cash and assets? And then what's that look like? So the valuation of your business is, this is actually interesting because I would probably say 90% of the clients that we work with and have talked to in the past, they're like, I want to exit this business in 5 years. Like, it's the new trend.
Yep.
Everybody, I'm going to sell in 5 years. Okay, cool. Talk to me about your bookkeeping. Talk to me about your finances. I don't know. I use my business account and my personal account kind of commingle it. I'm like, you could never sell this.
Yeah.
So that would be the second thing. And the third thing would be, what's your wealth strategy? Do you have, what kind of wealth do we need to produce together? Because we'll help them and to understand what type of investment strategy. That could be traditional, or it could be, what I would call advanced, which is probably going into real estate. I don't go too crazy into things personally. I won't say, oh, go get crypto and buy gold and all that stuff. I'm pretty foundational.
Yep.
Because the truth is that I'm not trying to give people financial advice. I'm just telling them what I know has worked for me.
Right. So your company, what is it called?
Tax Plan Experts.
Tax Plan Experts. Is that taxplanexperts.com?
Yep.
Okay.
That's exactly it.
So you guys only provide strategy. Like, you guys don't do bookkeeping. You won't file a tax return and all that, right?
Well, we can do those things.
Okay,
and we do. It's just, so the accounting system or the traditional tax system we kind of flipped it. We said, most people will lead with a tax return. Hey, I can help you file your taxes. Well, I did that for too long. Okay. And typically that doesn't lead to a long-term relationship. That's kind of seasonality and stuff. So I said, I don't want to do taxes for people unless there are clients doing strategy.
Right.
So we flip the model and we say, if you want to work with us, you've got to work with us on strategy. And then we can help you with your tax returns and possibly your bookkeeping and things of that nature.
Got it. So you're only having strategy.
Correct.
That's the pre-qualifier.
Correct. Because we won't do a tax return unless you're a client of ours already.
Right. So, you said you've been doing this since like 2008. How did you get into it? So
interesting enough. So I got into real estate first. I was in 2006. I got my real estate license. I wanted to be a realtor. I thought, real estate was booming. I thought that was my future. I was about 22-ish. And I thought, this is what I want to do with my life. Yeah. And I know you were a realtor, right?
Yep.
For a while. Are you still? Are you licensed?
No, not anymore.
Yeah, it doesn't make sense, right?
No.
So I get into the industry and I'm thinking, I'm going to go and I'm going to make a bunch of money. And the first year in 2006 and 2007, I did all right. But that's when you kind of really are figuring it out.
Yeah.
And then as soon as I kind of figured it out, the market crashed from under me.
Right.
So I'm trying to figure out what I want to do in my life. That was the real hope and dreams that I had. And a buddy of mine, we're having a beer and he says, hey, my cousin is in a business that does taxes. And he's told me that we should probably get into it. And I said, well, first off, I don't really want to do that. And I go, why would you say that? He goes, dude, just, it's a good opportunity. And I said, well, look, there's only one thing I know about taxes. This is what I told him straight up. I don't like paying them. And he looks over to me and he's like, but look, we got into he goes, it's a franchise. So you should think about this. And I said, okay, well, let's go listen to this. He goes, we're going to go have some drinks and party. Let's go. I'm in my early 20s. So we go to this event and I'm sitting there like, I don't really care about all this stuff. I don't think about taxes. I don't want to do numbers. And then a guy gets up there and he starts speaking about kind of his life and what he's built and how he built it, multi-unit operations, $1 million income, all this stuff. But then he says, look, if you don't get anything out of this, I want you to hear this one thing. And I said, what is that? And he said, this is a recession-proof industry. And then I said, well, hold on. I just got my ass kicked in real estate. This has got to be something here. So I entered into that franchise as kind of learning the business. And I primarily did tax preparation for the first probably about 12 years is all I focused on. Just tax preparation.
Wow.
Yeah.
So you were doing the dirty work.
Yeah. And primarily, to be truthful, clients that didn't have tax liabilities.
Yeah. They just needed it done.
Yeah, correct. Well, there's 70% of taxpayers today don't pay any taxes.
Wow.
Right? 67 of that don't pay taxes because they don't make money.
Wow.
3% make a lot of money, but avoid paying taxes. And that's what I call the 3% club.
Yeah. So the 3% club's the wealthy people who don't pay taxes.
That's exactly right. That's where you want to be. That's where we all want to be. All times.
How do you get there?
Well, you've got to have a plan. That means strategy, right? And it doesn't happen overnight. This is truly a 5 to 10 year strategy because you've got to accumulate assets. You've got to invest in the right entities. You've got to learn the structure. Like for an example, we have a lot of people coming to us that want to do an exit, but they're an S Corp. And S Corps are really popular. If you go on Instagram or YouTube, or you've probably even recorded a video, or 100%. I have too.
Yep.
But that's not the best exit strategy. A best exit strategy would be a C Corp.
Yeah.
Because the acquisition can be through shares. And if you have it long enough and you meet certain conditions, $10 million of capital gains can be tax free.
Yeah.
And so many people don't know that. So they just don't have a strategy. So what we do is we start with a plan, looking at your entities. We restructure those entities for the goals that are lifelong.
Yeah.
Then we look at your investment strategy and see if that matches the same. And a lot of it has to do with real estate, to be honest with you.
Yeah.
Because I like real estate. It could be other assets, but obviously,
and mainly just like depreciation and everything.
Correct. But it could be in different forms, right? And it could be different types of properties. It could be your strategy and versus, because we have clients, to be truthful, that want to just write off real estate. But as you know, and I know, you can't just get into real estate and have it as a tax deduction. There's certain criteria that needs to be met. So we have to coach them through that.
Right.
And a lot of our clients are married. So that actually works out really well because a lot of the times one of the spouses can be the real estate professional. The other spouse can be the breadwinner per se. It doesn't really have to be that way, but that always works.
Yep.
And I'm sure, is your wife the real estate professional?
I'm still the real estate professional.
You could still do it. You still qualify. That's right.
But we have talked about that with my wife of making her the real estate pro if there became a point where maybe I didn't qualify anymore.
Yeah, that's true. Because your business is all about real estate. So that kind of makes sense. Yeah, that makes sense. Most of my clients aren't in real estate primarily. So they have other types of things.
But that's the beauty of what we're talking about is, hey, real estate gives some of the biggest deductions and tax benefits out of any it's probably the best asset class. Would you agree?
I would 100% agree.
Yeah.
No matter what anybody says right now, by the way.
and not because obviously appreciation and cash flow and all those things, but the tax benefits, nothing really compares.
Dude, there's four quadrants of that, right? There's cash flow, there's tax deduction, right? There's cash flow, tax deduction, more tax deductions on the different types of like your interest, your insurance, your real estate taxes, all of those things, right? The cash flow, the appreciation that comes from the property, the appreciation, right? And the wealth building strategy, they all come together.
Yeah.
It's
and
huge.
The principal pay down.
And principal, it's because it's appreciated. Yeah. So your principal pay down. Yeah.
Yep. So yeah, I love real estate. And, it's why we always I'm such a big proponent. I'm like, look, real estate can be something that makes you a bunch of money as active income, right? Like I made my active income through flipping houses. That was how I made my first millions. And it changed my life. And then I started to get a big tax bill because I actually was making money. And then I'm like, well, what do I do? And at the time, I didn't even know why people bought rentals other than just, hey, get cash flow. That was always what I heard. Nobody ever talked about the tax side. They were just like, yeah, buy rentals for cash flow. And then in 30 years, they'll be worth a lot. But then once I started to get around other people, I realized, no, dude, a lot of these guys are just buying real estate to mitigate their taxes.
That's right.
And once I understood how depreciation worked and cost segregations worked and everything, I was like, wow. So basically there's like a formula. I just need to buy X amount of real estate
to offset
my income.
It's interesting you say that because if you know that, you evaluate real estate differently.
Yeah.
Because now you're not just like, oh, I got to get $1,000 cash flow every month. That, by the way, that's not even heard of right now.
Yeah, no, you can't do that.
You can't do that.
You might break even if you're lucky.
But if you break even and you're saving 40 or 50 grand in taxes,
you cash flowed a ton.
Yeah, but they're not seeing it on that end. They're only seeing it on the front end. Like, I need to have the extra $300 a month. And I actually am, man, I'm probably more raw with a lot of people in that way. I'm like, look, cash flow is a bonus at this point in real estate. Everybody should think that. This is not the standard. It's the bonus now.
I actually have an opinion on that is kind of controversial, but I think that cash flow in real estate's kind of going away.
I see that.
I think that people are going to keep buying real estate for purely appreciation and tax benefits.
Correct.
Like, I think that because we evaluate deals every single day.
And you couldn't see one, huh?
And I just see them keep going down and down and down, especially with higher rates and everything. And, the only way you'll really get cash flow is getting a ton of less leverage, right?
Yep.
That's the only way to make it pencil out cash flow wise. But then, you're putting more capital into it, and that's hurting your IRR and all those things. And so, as I'm looking at real estate going forward, I believe that, the days of people thinking like cash flow and passive income, like you're not going to buy based on that. You're going to buy based on 5 to 10 years down the road. And you're going to say, hey, how much do I think this market and this property is going to appreciate? How much tax deduction does it give me today? And, in 5 to 10 years, I will cash flow.
Yep.
There will be rent growth, and then I'll be good.
That's exactly right. I 100% agree with you. I think there's a lot of, not to discredit anybody who's starting out there, you can find a deal.
Yeah.
That will cash flow, but you're not going to find 20 of them. Well, I guess you could if you looked hard enough, right?
Well, and, if you're in a certain market like the Midwest, you can find, cash flow deals, but you're not going to appreciate. You're not going to get the big money that, if you were to buy in Las Vegas or a Texas or a California or a Florida or any of these southern states that are really, ripping right now.
I agree with that. Real estate has always been the one thing that I think I've been investing in real estate since 2011. And I think it's the one thing that I've always come back to that still, I can trust.
Hey, if you're looking to grow your real estate investing business, whether you're just getting started trying to get your first deal or you're trying to scale and get to the next level, you need to join us at Wealthy Investor. We've got events every single quarter that are absolutely crazy. We've got online coaching programs where we have Zoom calls, a community every single week. We give you everything you need to know to start your business, scripts, processes, SOPs, all of it. It's for you so that you can dominate. So if you want to learn more about how to join our community and be mentored by me and some of our top coaches and be around other students who are absolutely crushing it, go to wealthyinvestor.com, apply for a free call with my team. Once again, wealthyinvestor.com, apply for a call today.
I talk to clients all the time and they're like, I love real estate because I can see it.
Yeah.
And I feel like that's what I feel the same way. I like to see it. I like to know I own it. It's a hard asset.
Yeah.
Right. Putting it in crypto and all that stuff does not excite me.
Yeah.
Doesn't.
Well, there's no tax benefits either.
Yeah, there's not. Well, they can do the tax loss harvesting at the end of the year. But that's what people always tell me that. I'm like, but you lost money, bro.
Yeah.
Like, I don't understand why this is a good thing.
Yeah, no. Well, it's better than, just holding a paper loss.
Yeah. I don't know if you saw the Biden increase to capital gains last year. Did you see this in the fourth quarter? He proposed that he wanted to increase capital gains.
What was the proposal?
The proposal is that capital gains would get realized no matter if you actually realize them. So if you have a stock, let's say you bought it for $30, any stock, and at the end of the year it turned into $50. That $20 gets taxed no matter what, even if you took the cash or not. And I'm like, this is ridiculous.
They don't even have the money.
Yeah, exactly. So what that would do is it literally tank the economy.
Yeah.
Because everybody would have to sell.
What was old Biden thinking?
Well, I don't know if he is thinking, but somebody said that to him and he said, let's go with that. Right. And I'm like,
that sounds good.
Yeah. Because if I own stock, then I would actually have to, or anything.
You'd be forced to sell.
Exactly.
To realize the game.
So imagine everybody just selling off at the end of December every year.
Yeah.
How many companies would tank?
A lot.
They're already close to tanking. I'm watching these videos now of all these companies, all these major retailers who are all going to be collapsing because of this shift.
It's crazy.
Yeah.
Yeah. Retail's interesting. Office space, retail, like what do you think is going to happen to those?
I think commercial is an interesting world to be in right now. I think that, most just like it would be just like multifamily, right? Over the last 3 years, people secured notes that were really, really favored in their interest, literally interest.
Yep.
And, they may have overpaid for those properties. The appreciation isn't outweighing currently what the market says.
Yep.
And so their terms are coming. We're going to see at the end of this year and the next year and a half, terms are coming and people aren't going to be able to hold on to those assets for the same rent scale and the same payments with that new 9% interest rate versus a 3%. And it's going to be interesting. So there's going to be a lot of assets coming up in the next year and a half that I think most people will be able to acquire on a very good deal.
Right.
And the only people who are going to benefit on this are the banks.
Yeah.
Because they're the ones who hold the asset. So the investors are the ones who are going to get screwed.
Yeah.
The investors.
100%. No, I feel that. So, just thinking about these different asset classes and tax laws and proposals, like another thing I saw that the government did was they're making it like more expensive for good credit.
Oh, dude.
What's up with that?
Well, it's interesting. So I'll tell you that I'm actually in the state of Texas, we have a mortgage company and I'm an MLO.
Okay.
Now I don't practice if you say it, but I know enough, right? And so, having me and you or most of us pay for somebody else's bad decisions is ignorant.
Yeah.
It incentivizes people to not have good habits and do the right thing.
Yeah.
It's so idiotic to me how the world is coming, student loan forgiveness.
Yeah.
I mean, everybody deserves some help. I get it, but not at the expense of someone else's hard work.
Yeah.
I mean, if I wanted to sponsor somebody's mortgage, then let me figure that out. Mm-hmm. Like I'll figure that out myself, right? Like I want to help my team, my team that's with us here. Like if they need to buy something and I can help them, that should be my response. Well, not my responsibility. It's just my decision.
Yeah.
And I think having this happen is it's a shame.
Yeah.
It's a shame to our country. I can only imagine young people. And I say young because that's where you're most influenced. Because I remember myself at 20, if I was 20 right now, I'd be like, yeah, buddy, let's thank you guys. But at my age now, I'm thinking, hey, this isn't fair. This ain't right is probably a better statement.
No, it's not right at all. It's crazy. What have you thought about just this current administration with, how they've been doing tax laws and these changes and other things?
Well, there has been some changes, right? The Inflation Reduction Act, which really wasn't anything that had inflation or any reduction of inflation, but it did change some things for solar, EV. It did change some things for retirement savings account contributions. So there has been some benefits to different sectors that they wish to produce, right? So like the way the tax law is written, it's basically favor the things that the administration wants to happen, right? Green energy, that's huge, right? So yours is an electric vehicle, right? Which you have. Yeah. So electric vehicles are getting all these incentives. Like yesterday, we purchased a new van for the company that's half gas and half charge. Mm-hmm. And so bought it because I got a $7,500 tax credit, right? And I got a really great deal on the thing. So I said, we need this van for our company. I'm just going to buy this. Yeah. So it made me buy it. Yeah. The $7,500 made the decision for me. So it does help. However, there are other areas that obviously don't help us, right? These changes that could happen, like the increase in capital gains that they're proposing, the increase in actual taxes to the wealthy people. And I mean, wealth can be defined by many people in different ways, but I think what this administration is really gearing towards in every tax decision is to make sure that people who make money pay more taxes. Mm-hmm. But I would caveat that by saying Congress writes laws that the IRS imposes. So IRS doesn't write any laws; they just impose the law. So as long as these guys in Congress are making money, they're always going to write things that favor wealthy people.
Right.
It's just, they're not going to talk about those things.
Right.
They won't say that. That's why you need a strategist, by the way, because that's what we're learning from them, or reading the code, discovering and learning and uncovering, because that's what they don't want to talk about, their own loopholes.
Yeah. What's the difference between like a tax strategist and a tax attorney?
So a tax attorney, typically that's somebody you go to when you have a challenge with the IRS. It's not a person you need in your life. And well, I mean, you can always have one on a retainer if you're very, very wealthy, right? Most people do, but you don't need an attorney unless you are going to go to litigation.
Got it.
It's with the IRS primarily, but even today, to be truthful, I mean, the profession of the tax industry is shifting so much that the credentialed people today are less knowledgeable in the actual industry. That's a pretty bold statement, but I see it because the majority of people are like, this is how it's been done forever, and this is how it always be, and we don't need to learn anymore. And the grinders, like me and my team, the guys who are really trying to figure it out every day, we're the ones who really know where the strategies are.
Right.
And so difference would be a strategist knows what's going on in the industry, follows the tax trends, understands the tax code, looking to maximize. And the coolest thing, to be truthful, is in our industry, or at least with my clients, I get clients of all diversities. And I mean, just in income, ethnicity, all these things, and different types of income, different types from different businesses. And they come to me with strategies that they've imposed in the past. And I'm like, wow, that was interesting. Let's talk about that. And then I'll learn.
You're learning.
And then I bring it to my next client. I'm like, hey, there's this thing we just learned about. We're bringing this in because we can't know it all. And it becomes very interesting. It's an ecosystem of feeding itself rather than kind of a tax attorney just handles litigation.
Yeah. Like how big is the IRS code book? Like it's
stupid. Nobody could read it.
Yeah. So I've thought about that a lot with just taxes and everything. I'm like, man, dude, there's so many things that nobody is talking about. And I was actually talking to one of my really wealthy friends, and he's made over $100 million in a year.
Nice.
Right? So like this dude,
that's good money,
is making money.
Yeah.
And, you know, he's telling me about his taxes and that, you know, he doesn't pay a lot. He's a real estate guy.
There you go.
And he was just telling me like, yeah, you know, we have this tax system where we don't have to pay much money at all. And like, it's totally unique. It's not the stuff that everyone talks about. And I'm just like, and he's like, dude, honestly, we could patent it. We could start a whole new business around just like this one strategy.
Wow.
And it made me just think like, yeah, there's just so much that you could do. And when I hear about all these different ways and, you know, like people maneuver, like, you know, what we're talking about with depreciation and everything, like that's basic. Like everyone can do it. But then there's all these other things. Like I had people telling me about, you know, buying luxury art and donating it.
Yeah.
I had people tell me about like all these crazy things you can do.
Well, the more income you have, the more advanced the strategy.
Yeah.
And that does happen. But the reason it becomes more advanced is because the cost to set up and implement those strategies gets exorbitant, right? So like that guy who's got $100 million, he was going to pay, you know, let's say 40 million in taxes. He probably paid somebody $3 to $5 million
to figure it out.
To figure that out. And it's not because they figured it out. It's because there's probably a bunch of attorneys. There's a bunch of estate planners. There's a bunch of, you know what I mean? And they're all putting together this elaborate thing. And the interesting thing is for that kind of wealth, you kind of need it because you're trying to protect it.
Yeah.
But if you ask any of them, so how's this all set up? They're like, I have no freaking, it's a web.
Well, and that's, I was like, so just explain to me what you're doing then. He's like, dude, I would have to show you. Like,
we need a whiteboard. And
and I'm like, dude, it's that complex. That's crazy. But like, I've even heard of other things, you know, like these insurance companies. Do you guys ever do that? Yeah, captives.
We can set those up. Obviously, it's a strategy depending on what your company top line revenue is and what you are paying your employees and what they have. So it is a strategy. So there's those conservation easements are a big deal for everyone. I mean, to be honest, that sounds stupid to me, but you know, but it works. It can work for the right client, right? But there's an SOP strategy. Which is called the structured ownership program. That's a very unique. I've never
heard of that.
It's a unique strategy, and
that's a new one. I've heard of everything else you've mentioned, but I've heard of that.
A structured ownership program is really it depends on so there's only a few companies in the whole country that can set that up.
Okay.
And so we're not like the administrator of the program. We just have a company we work with that does it.
Right.
And it's a very good strategy to offset capital gains and actually ordinary or capital gains income. In fact, we did a few last year offsetting about $13 million in taxes on just a few clients.
So like, what's the basic framework of what it does?
It's you invest in a company that has high losses and high revenue at certain peaks.
Okay. I've kind of heard of that.
Yeah.
Okay. And so you're buying somebody else's losses.
You can, yes. It could be also investment strategies. Like one company does Forex trading. Okay. And then they do the Forex trading in such high volumes and such high quantities that at the time of closing at the end of the year, it may just cause a significant loss and pretty much very close to probably your taxable income.
Got it. I get it. Okay. That makes sense.
You know, a lot of these things are very, really gray, to be truthful.
Yeah.
Very gray, but they're not illegal. It's a very gray area to play in. And you have to work with the right people because if they don't structure that right.
Well, and you also, at the end of the day, like a lot of people would hear gray and they'd be like, oh, well, I don't want to do that because I'm going to get in trouble.
Yeah.
And it's like, the thing we've always said is that, hey, as long as we have a leg to stand on to support our position of why we did this, like you'll be fine. And that's the worst that can happen is they say, no, we don't agree. And then you're going to pay the tax.
Yeah. You know, that's what I tell people they're so afraid of the IRS and the IRS of 30 years ago or 50 years ago is not the IRS of today.
Yeah.
It's very correspondence, here's a letter, that kind of stuff. But the truth is that you're not going to go to jail if you put something on a tax return that had something to support it, like you mentioned.
Yep.
And as long as it wasn't false or malicious in intent, you're never going to go to jail. And in fact, most IRS auditors are super cool. I mean, I met a bunch of them over the course of my career, and every one of them has had a good attitude. They're not there to break your legs and collect the bill. They're looking for a bone though, right? They got to, it's because they have a boss, and their boss is like, hey, you need to come home with a bone today. Okay. So you throw them a $5,000 bone here and there, and they're like, yeah, I got something, boss. We good. This guy was, he was good. Yeah. And I always tell people, if you get audited and they don't find anything, you're overpaying in taxes.
Yeah, exactly.
Like they got to find something.
Trying to push the envelope.
Yeah, because if they found something, that means they're like, okay, we got to figure out how to get more. But if they say, you know what, you are super clean, bro. Clean, good job. Dude. That means you overpaid, dude. Yeah. They're like, we found it, boss. He's way paying over. Just leave him alone. Leave him alone. Let him do what he's got to do.
Yeah. Good job, man. We're super proud of you. You didn't have to pay anything extra.
Yeah. Like, you're doing it right.
You're doing a good citizen.
It's so true though. I mean,
you can meet Biden and shake his hand.
Yeah. You're sponsoring Ukraine right now and all that, right? You're a good sponsor.
You're a good sponsor. That's funny. So another thing that I've seen. So how much do retirement accounts play into your guys' strategy?
They can. It just depends, because one of the things that most people don't understand about retirement accounts in general is that they can be self-directed.
Yeah.
So a lot of the times I work with high income earners who are what we call hyper growth, and they're like, shit, I don't need a retirement vehicle. Like my business is my retirement. Yeah. And I hear that all the time because I thought like that for a long time. I'm like, I don't need a retirement. Why do I want to give my money to those guys? They're going to put it in the market. Look at the market. This is stupid. I don't understand it. Yeah. But imagine if you could fund your own retirement account that you could then use to invest in things like real estate. I think that's a great perspective, and it gives you tax savings. Do we use a ton of it? Depends on the client. It just depends if that's their strategy, if they're wanting to be very conservative and this is what they believe in. Yeah. We love that. And I think you know, having self-directed, like for an example, we have one client who buys cattle and flips them with his self-director. And he makes a lot of money.
How can you flip? How much does a cattle flip for?
So he buys these cattle for like $600 and he'll sell them for like $2,500 or something.
Where does he source his cattle from?
So this is interesting. And actually, so I was sitting at a table with another group of people at one of our events about 2 months ago. And I can't remember there's an app now for this. I swear.
Flip cattle.
Huh?
To flip cattle.
Yes, I swear. So the guy showed me the app and I didn't download it that day. I should have downloaded it. But you can go on the app, find a farm that needs somebody to buy cattle. You buy a cattle, and then after 6 months, they flip it and you get the profits. You split the profit with the farmer.
Wow. But you ain't selling Wagyu for $600.
No. These are just, probably ground beef.
This is just the bottom.
Yeah. There's a lot of man. So I have a client that it is really big in the meat industry. Yeah. Like I don't know. Anyways, they do like 1 billion pounds of meat every year or something. It's something crazy.
Yeah, that's crazy.
It's crazy. But he's like, yeah, man, meat's good. I'm like, yeah, it is, dude. I see his top line numbers. I see what they're doing. I'm like, man, this is incredible. So if you're going to buy meat or any kind of food right now, it's a good time to be in it. It's in demand, right?
Yeah, no, meat's, well, once again, going back to government agendas, they don't want you to eat meat from all the things you see about, you got to go eat your Beyond Burger. And
oh my gosh.
All this crap.
Like, the Impossible Burgers.
Yeah.
By the way, everywhere I go in Vegas, they have an Impossible something. And
they do.
And I'm like,
there's no way this man-made thing is better for you
than a piece of meat,
than an actual cow. There's no way. It's something made in a lab.
I mean, it's incredible. Last night we saw there was like this Impossible Burger. The night before was like Impossible Chicken Nuggets. I'm like, what did you put in this thing?
Well, chicken nuggets were already bad to begin with.
Well, from McDonald's, Yeah. I mean, have you ever seen that video where it looks like they print them? It comes down like a conveyor belt, and it's like a goo that forms into a nugget, and then it freezes them so that they stay in a shape.
I don't even want to see it. I actually like McDonald's nuggets; they're good.
Until now.
Yeah, but I prefer my buddy Houston's hot chicken, and
I feel like I've heard this on your show. Where's Houston's hot chicken? Is there one here?
Yeah, there's one here. You should go try it.
Where is it at?
There's one in Henderson right here. So it's probably like 5-10 minutes from here. You guys should go there for lunch.
Okay.
It's good.
Hot chicken.
Really good. Especially if do you like spicy food?
Heck yeah, dude.
Oh yeah. Get their spicy.
Is it like
I'm on a fast right now, but man, this is making me want a Houston's.
Have you ever done Hottie Bees?
No.
Hottie B's Fried Chicken in Nashville?
No.
So it's hot Nashville Fried Chicken. They have one in the Cosmo.
Okay.
It's super good, bro.
Okay. I'll have to try that out.
Super good. But I'm going to try this place now.
Yeah, try it. So, okay, retirement accounts. Like, for me, I don't really have much retirement accounts. Like, I have a self-directed IRA. I've invested in my own real estate funds with it, which is, I think, an amazing thing. For people who want to invest in real estate, they don't know what to do. I think investing in a fund is a great choice.
Amen.
So, that's one thing that I did. But, I see these guys talking about 401ks and solos and even like infinite banking and stuff. What do you think of all that?
Well, I mean, everybody's got a strategy, right? Everybody's got to come up with a strategy that works best for them. I would probably say this, though. Most of us have a favored strategy. And so when somebody asks us a question, we tell them what we do, right? And so most people who are investing in things today are being sold something. Right. So it may not always be the best, but based on their information and the person that sold it to them is probably the person that put them through there. So like you talk to a financial advisor, oh, you got to open a Roth and you got to open this, because they want assets under management.
Yep.
Right. You talk to a real estate guy.
Hey, give it to me in Pineda Capital. We'll take it.
Exactly.
Yeah.
But none of them are wrong. The worst thing you could do is not do anything.
Yeah.
So you might as well figure out a strategy that makes sense for you. I think you should never invest in anything you don't understand.
Okay.
So if you don't understand what it's doing, how it works, and how you're going to make money, and how there's a return of capital, don't ever do it.
Right.
I mean, so I wouldn't blindly give my money to anything. I mean, I don't like blindly give money to charity. I want to see where the money goes, right?
Yeah.
Like I am a giver, but I want to see the result, the impact.
Yeah.
That's in everything I do.
Yeah. No, 100%. So what do you think about, we went over retirement accounts and infinite banking. Another strategy I see people doing is just moving to another country.
Well, or Puerto Rico, right?
Yeah.
Or Puerto Rico, so they can get that low tax rate.
Yeah.
Well, I mean,
do you guys ever advise that?
I mean, personally, if they want to. So we do have clients that are very, let's call it an ambitious word.
Yeah.
They want to do those things. I'm not going to go against it. I would tell you this is that most people don't make enough money to have that kind of problem.
Yeah.
But then it's usually the people who don't have enough money that think
want
about
to do it.
Yes. I'm like, dude, I got clients that make 50, 100 million a year, and they're not thinking about moving anywhere. We just work a strategy. We figure it out. We lower their tax liability to the number that we feel like we could get it to. And that's life.
Yeah.
Like, why do you need to uproot your whole life to go to another country just so you can avoid some taxes for money that you really don't make a lot of? And I don't like to insult people like that, but they don't. You know what I mean? To save 30 grand. I'm going to move to Puerto Rico.
No.
Like
that makes no sense.
You're moving, even though Puerto Rico is part of the United States, it is like a third world country. Their grid, their electrical grid is nothing. Their water system isn't that good.
I heard they're also like cracking down on that.
The IRS obviously knows that people are doing this. And they're tracking. So now, I mean, they can track this. They can see your flights because your passports.
Yep.
Right. So they know when you're in and out. They know what you're doing. I mean, we see people do this in states that I would recommend a lot. Like if you like Texas or even Nevada, this is a great state.
Yep.
But let's say you lived in California. There's a big movement, and we have a lot of clients here in Las Vegas who are from, let's say, San Diego.
Yep.
And they bought a house here.
Yeah.
And they live here more than half the year.
Yeah.
And they still have a house there that they Airbnb.
Yep.
And they come in and out as they please, and that's a strategy.
Yeah.
Because they're avoiding that permanent resident status in California. So that would be something I'd recommend. But out of the country, it's if the client wants to do it and they're adamant, we'll support it. But I'm not going to make that as a recommendation.
What I know Puerto Rico. I was there 2 years ago, like talking about it and looking at everything.
You want to do your capital there?
No, I went there for a mastermind, but I had a bunch of my friends who live there and they're making really good money. And so they're just telling me about it and everything. I'm like, oh, okay, like this is pretty cool. And so I did a YouTube video on it and it got a lot of views. So it was good.
Of course.
But I do want to buy a second home somewhere internationally.
Okay.
Preferably. But the one thing that kills me about buying internationally is like, I don't get depreciation or anything.
Mm-mm. And you got to pay taxes on the income. Well, if you get to subtract whatever taxes you were paying in that country from what you would have paid here, and the difference you still have to pay. So if you get income from another country, you're going to pay taxes on it here.
Well, I'm just talking about this property being a second home. So, I mean, I might make some rental income, but
oh, okay. So it's like a residence.
Yeah.
Okay.
But I don't get any tax benefits for doing that.
Mm-mm.
It's crazy.
But you get a second home.
Yeah. So at that point, you're just buying it for, investment. Obviously, you're hoping that the market goes up, but
correct.
For also just happiness.
Yeah. I mean, so this is a question I actually get a lot of. People, oh man, I want to buy this. I want to do this. And I said, that's just part of your wealth strategy. It doesn't have to be the tax. It could just be the wealth, because you're buying a piece of real estate that will appreciate. Eventually, you're going to have something. The time we'll need to talk is when there's a capital gains event.
Yeah.
And that'll happen years down the road, but we can plan for that, right? How do we title that? How does this happen? The asset protection piece. So it's not always going to benefit you today, or it may not even benefit you ever. We just may have to strategize around it.
Yeah. So are there any countries that you know of that a lot of people are going to beyond Puerto Rico?
Not in droves or anything.
Reasons.
No, not really. I have some clients who are always like, well, I want the foreign income exclusion of $120,000, blah, blah, blah. And I'm like,
that ain't nothing.
I do, man. There's this one client, I love him to death, but he tells me this all the time. And I get at him. I'm like, man, it's just baby money. Why don't we think about the $12 million exclusion, like that's when we're talking money, right?
Where's that?
I'm just making that up, right?
Okay. Where's that?
I know, right? Well, you could get a $10 million if you're a C Corp on an exit of 5 years, so the exclusion of capital gains.
So you wouldn't pay tax on $10 million if you had a C Corp for 5 years.
There's other things that are nuances about your business, how you formed it, when you formed it. Those are the things that would matter. But you could have a totally tax-free gain on the first 10 million. On the first 10.
And we're,
but you're not exiting for 10. So
yeah. But so we are, we started a new company called Pineda Partners, where we're acquiring businesses. Yep. And so we're literally going into them with the intent to flip. Whereas like all my current businesses, I never went into them with the intent to ever really sell them. Yep. I mean, like I'm just building them all, and if I exit down the road, cool. But like Pineda Partners, we are looking to exit.
What's the strategy? 3 to 5 years there, or 24 to 36?
Faster, yeah, like 24 to 36.
And what do you guys come in and do? Maybe the operations, the fulfillment system, and then the sales cycle?
Whatever the company needs. But we can provide capital if that's what they need, or we can provide strategy if that's what they need. And I'm sure we'll get a lot of consulting for equity plays. And
is there a specific industry you're interested in?
The two industries that I really like are obviously anything in real estate. Okay. We'll take mortgage companies, title companies, property.
Okay, that's pretty cool.
We'll take anything in real estate.
Okay.
Two would be education. We know education really well, so we can help scale other education businesses.
Would this be like courses, or you're talking about
coaching,
real physical
events,
retail?
No, like online education.
Okay. Cool.
We I guess you would call that industry info. So we're interested in that. And then the third one would be just different tech plays that are related to things that I'm, aware of.
Tech is so we have a lot of clients, and diversity is pretty important for me. It's not important, but it just happens. Tech, man, oh man, like you're in tech plays. There's so many clients who come to us who are on an exit from a tech play in less than 3 years, and it's
just killing it.
It's usually 8 figures, man.
Yeah.
Usually 8 figures, and exits.
Yeah.
So these are guys that just get acquired. And there's one client that I've been working with that has done this 3 times.
Yeah.
And he's 36 years old. And every exit's 20 million, 30 million.
And that's what I'm trying to do.
Yeah.
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 And I know we're like, our big specialty is sales and marketing. And so, that's what you need to grow. So if we already have a company that's got a great product and great operations, and we can throw the sauce on it.
Yeah. You can feel this. You're the gasoline to that fire. Huh?
Yeah. Like they already have a fire. Now bring us in for the gas.
There you go, man.
So I'm excited about that. And
that could be a big deal.
Yeah. I'm hopeful that that'll be our biggest thing that we do, right? Because the options are limitless.
Yeah. Because once you get a good team together, which it sounds like you've got, once you have the scalability to get as many businesses under management, you find your market, the niche.
Yep.
It's just niching down, because once you specialize in something, there's a lot of companies out there that just take any company under their wing, you should, more selective you are, the easier it becomes. It's easy to scale.
One thing that I thought about doing, since we have a tax company, is doing like a tax company roll up with other tax companies.
You're talking about language.
Yeah. Do you have any plans to do something like that?
We are actually in the process of doing that.
You're doing that now?
Yeah. Well, because we built a very systematic approach to handling tax strategy, very systematized, meaning the way somebody comes through our system is very systematized, from a funnel to a call to a sale, fulfillment, the results over and over. It's repetitive. It is pretty, consistent every day. So anchoring this on top of an existing firm, if there's a CPA or EA or somebody out there, typically doing, right now we're looking at 2 to 5 million. In annualized sales right now is probably our target. Yeah. And we would be able to increase that probably 40 to 50% in year one with just the system that we put in place. To roll them up, our goal is to get about 30 under management and then take it to market. Yeah. That would be my play.
Yeah. So what do you think a tax company would trade at? What multiple in this roll up?
Well, the interesting thing is traditionally it would only be a 1 to a 1.5 multiple. Not of EBITDA, of top line. But in this particular instance, I think we can get a 3 to 5
of revenue.
Yeah, maybe it depends on the top line number, right? So if we get to 100 million, I think we can probably get maybe even a 3, maybe a 5. If we're under that, we might get a 3. Yeah. But I think if we got 30 firms and we're at 60 to 80 million dollars. Yeah. 3X is okay with me, I know these tech companies are getting 10s, right? but I can take a 3. But we would, we're adding value because the roll up is really coming in and taking equity partnership with the current owner. The vast majority of CPAs and EAs, the reason that we do so well is because the majority of them are nearing retirement age. Let's use that as the term. Right. And a lot of them don't have an exit strategy. Yeah. So we could be an exit strategy for them.
Yeah. No, 100%.
And add value to their clients, because a lot of clients are begging for advisory services. They're screaming for it, and their current advisor just doesn't have the capacity to do it.
Yeah, no, 100%. So I'm curious what you would tell me to do on this strategy. So I told you, I do want to buy property in either Dominican or Costa Rica or something. I'm looking at Hawaii only because it would be in the US and I'd get all those benefits.
And you could probably do a direct flight from here.
Yeah, you could do a direct flight. So Hawaii's also an option. But I like tropical, right? So I also have this piece of land here in Las Vegas that I was going to build my dream home on, but now I'm going to sell it.
You've talked about this, right? Yep. You bought it about 2 years ago?
2.5 years ago. Yeah. Yep. And so I bought it for $620,000 and it's worth probably $6 million today.
Man.
So it was a good deal. So obviously though, there's a big tax liability if I
capital gains, man.
Right? What's the long-term tax, 20% or something?
Yeah, 21% or 20% rather. Yeah.
Yep. So, I would pay $1 million basically.
Man.
Yeah. So, knowing that I would sell it with the intent to go buy something else, maybe even internationally.
Oh, okay. That makes, that becomes harder.
I can't really 1031 it.
I would say stay in the States and let's do a 1031, man.
I know.
If you did 1031 in Hawaii, I think you could buy something real nice. Yeah. I think with the 5 million gain or 5.5, I think you could do something. Yeah. Pretty nice there. Dude.
So your strategy would just be, hey, go buy in the States
well, you could do a few things. So I think 1031 is the best strategy that would cause which is the easiest. Yeah. It'd be a clean, very simple. But again, you have to identify the property right away and you have to be ready to move and you'd have to have a buyer already lined up. So it's a little where the stars kind of have to align. Yeah. Yeah. But you can also defer those gains over the course of time. You could do a deferred sales trust, or you could do a installment sale, where you could take that fund, the funds that come as proceeds from the capital gains. You could put them with a fiduciary intermediary party, which you would call a trust, if you will, that would be managed by somebody outside of you. Yeah. And then you would be able to use that money distributed to you over the course of time, which would lessen the impact of the gain. Right. Doesn't mean you won't pay gains, but you can plan for the gains now. Yeah. Because most people can't plan for $1 million gain. Yeah. Or $1 million tax liability. Yeah, but we can plan for $250. Yeah. Every year. You see what I'm saying? So you could either do that, but if I had to guess, that wouldn't be your style. You just give me the freaking money and let's get some stuff. Yeah.
Yeah.
100%. Let's roll.
Yeah. I'm ready to roll. You know what? I pay $1 million, whatever. Right. Yeah. And that also is a strategy too, that it's like, and I've come across this where I'm like, you know what? The best strategy I can do is just make more money.
Well, and you know, it is very true. We tell people all the time when they're saying, well, you know, if I could just cut my expenses, I'm like, no. I understand we got to cut expenses. You probably do have some fat to cut.
Yeah.
But I mean, that shouldn't be your focus every day. Why don't you go make some more sales?
Yeah. Let's make some more money. And you know, the best way to pay a tax bill is just make more money.
Because you have to have money to pay it, right?
Yeah. So
I love it when people tell me, well, I just shouldn't make so much money so I don't have to pay so much taxes. I'm like,
they're like,
this is totally contradictory to what you need to do with your life, man.
Yeah.
You got to make more money. And if we'll deal with the tax part.
Yeah, we'll figure out the rest later. But if you're making a lot of money, you're going to be good.
There's always,
you'll figure it out.
Money solves a lot of problems.
Yeah. So this was kind of a plan I was thinking about with the land, and tell me what you think. So I was thinking if I sold it and I did want to buy internationally, not, you know, domestically, or even maybe if I want to buy domestically, this still might be a better plan. I thought about selling the land and then 1031ing it into like a new office space for us, because we're going to need new office space anyway at some point. And maybe I buy a $5-6 million building, right? I just put all the money towards this new space. Then I just cash out refi. And then I get whatever, 70%, 80%. Maybe they'll even give me more since it's primary. And then I have the cash tax free and I can go buy internationally or whatever.
I think that's a great strategy. I think the only thing that if I were in your position, I'd be considering is, do I need that much space?
Yeah.
You know what I mean? And can I sustain the bill? Because that's a big note. That's a huge note.
Yeah.
I mean, that's a huge note.
Well, I guess too, if I didn't need that much space, I could still rent out.
Yeah. But commercial is, I guess, so this type of what you're in today is shared office space. I think that's in demand everywhere. And I think that'll always be in demand, especially very, very sleek. I mean, have you ever seen the movie about WeWork?
I've read the book.
Okay, and I've read the book as well, but the movie, I mean, it's the same thing, right? But that's the concept, right? To turn something into a cool environment for people to be attracted to, that would bring energy and cause people to want to show up every day. Yeah. Like, I mean, that's your office right now. Imagine doing that at a bigger scale. I think that would be a great investment.
So like kind of have some executive suites?
Yeah.
Okay.
But like in a theme environment rather than
like super cool.
Yeah. Like I have a guy that we work with out of the Scottsdale area that has done that, but he even put a bar in it, like a big freaking bar and patio grill. And then inside he's got podcast studios and then he's got these big boardrooms. He's even got a little theater for people to come in and, you know, do presentations that can seat like 200 people. Yeah. Like that. You can rent those things. Yeah. You can rent the theater to people. You can rent the podcast studios.
Oh, yeah. I mean, that's what we're doing with our podcast studios now. Our event space, people already want to rent it now. So like we just built that stuff out.
Yeah. So you could do that at a higher level. I actually think, I mean, none of this is going to happen unless you put it for sale. You should put a big sign on it right now. You should go after this.
No, I am. So I just, I'm trying to think like, man, how can I get that path I just mentioned gives me like a new space. It gives me the, second home. And I don't have to pay any tax on it.
Yeah. I mean, I think that's a great. So I guess you probably are a little torn because you really like the land, I'm assuming.
The land is amazing. But I just moved into a new house. So like, I'm good. Like, even though this would be far better and crazier, the house I'm at now is just, it's tight. Like, I don't need anything else.
Is it interesting that, because I'm assuming you've upgraded several times in homes.
Yep.
But I'm assuming you travel so much at this point that a home is a home at this point.
I actually don't travel as much as you'd think.
Well, like vacation and things.
Yeah, we vacation a lot. Yeah, I would guess I'm probably in town 9 to 10 months a year.
Oh, okay.
So like I'm in town a lot. And maybe that will change as time goes on and I'll want to travel more and we'll have a second home somewhere and because
that's what I've thought a lot about. Like, why do I need, we do have a really nice house. We live on a lake. I mean, all these things, but do I need to buy a bigger, beautiful house or should I just buy a vacation home somewhere else?
That's basically what I came to is like, I can build this massive, cool house, or I could have my current house and a second house.
Yeah. Or a third house.
Or a third house.
Fourth, and so on and so forth.
I think that's what I would rather have.
Because that's what the wealthiest people in the world do. They got a house in the Hamptons.
Yeah.
Right? They got a house in Cali on the beach. They got a house in Florida.
Yeah.
And depending on the seasons.
Yeah.
That's the wealthiest people in the world. They travel like that. That's their lifestyle. In the spring, we spend it here. In the fall, we spend it here. And
I didn't know that until I joined the country club I'm at my new house. And
it's interesting.
People asked me and they were like, yeah, so
where do you go?
Do you live here full time? Like, what's your deal? And I'm like, what? Well, yeah.
You're the poor guy, right?
Yeah,
like,
I'm
so
the
what
poor
do you
guy.
do? What do you do?
I'm like, oh, so everybody, like, you're only here this time. Okay.
Yeah. Exposure is the one thing that stops people from thinking big, right? Because once you get exposed to somebody who says that statement, you're like, oh, this is a lifestyle, huh?
Yeah.
And then you're like, maybe I should consider this, because if they're doing it, there must be a reason for it.
Yeah.
And it's
1000%.
true. Well, that also plays into taxes for most people. Maybe they have a home here that they live here 6 months.
Yeah.
And then they live
their no income tax.
Yeah.
They go to the place they really want to live.
Correct.
Yeah.
Exactly. That's a strategy. Most people don't have that luxury. And that's why we work with a lot of rich people, because they're stuck in one home, but wealthy people have multiple homes.
Yeah. So as we wrap up here, I know that we've talked a lot about how wealthy people save taxes. What would you say to somebody who is not there yet, right? Like, what are some cool things they can do?
Well, first off, if you're not there yet, so this is going to get kind of business-like, and I would say, taxes more say it's like, a lot of people come to me and they're like, I want to form an LLC. I'm about to start. All of that foundational stuff is very important, but it's still not as important as making sales.
Yeah.
And that's the biggest challenge. So I usually can tell a successful person or who's going to be successful, not that's making it is on the path. It's the guy that's hustling, grinding, and then needs me, versus the guy that comes to me first before they make all the money. And they're like, I got plans. I'm like, okay, if you got plans, what's your track record prior to this? Yeah. And that'll help me understand where we're going, because I can't solve a problem you don't have.
Yeah.
So we got to worry about the problem in most cases. I wish I could be the guy that said, you should always just start it all perfect. But I think you and I probably did it the same way.
Yep.
Grinded until the problem came.
I 100% agree. Anytime I hear people talking about trying to save taxes and they don't even have anything
to protect or save,
like, should I have multiple LLCs? Should I, have this and that? I'm like, you don't make enough money. It doesn't matter. Like, the first
do whatever you want.
Yeah. Like, it's irrelevant. Like, you need to focus on making more money. Like you said, get more sales. Then worry about, protection and saving once you actually have the problem.
I'm probably an ass a lot to people, because they'll come to me and I need an LLC. Yeah. For what? So they can protect me if I get sued. What do you own? Nothing. They're going to sue you for anything, bro. Actually, if you had an LLC and you had insurance, now they're going to sue you.
Yeah.
You know what I'm saying? If you don't have anything, what are they going to sue you for? You're actually better off without anything right now. You should just go door knocking or do something, right? And find a hard skill that you can maximize: sales, marketing, communication. Those 3 skills. I tell anybody, you master those 3 things, the doors to any building, any business, any dollar is open, but you got to master them and not just dabble in them.
And then that's what we always teach. We have a principle called make, manage, multiply. Mm-hmm. And, in the make stage, all I'm focused on in stage 1 is just getting a skill that makes me $250,000 a year. Like, until you have that skill, whether it's sales, whether it's creating content, flipping houses, wholesaling, which obviously sales and communication, all that plays into, those skills being developed. But man, you got to learn how to get one of those skills before you worry about any of this other stuff.
Oh man, I wish this was taught more to people in schools, or even just in general. I think a lot of people have this misconception that it's about fulfillment. It's the front is more important than the back end.
Yeah. And
so many people get stuck in I can make this better than anyone. Well, that's great. But how do you get it to the people who need it?
Yeah, 100%. No, I love it, dude. Well, I've had a blast chatting with you. Where can people find your company again?
So taxplanexperts.com. Taxplan, just as it's spelled, taxplanexperts.com.
Cool. So we will link to them down below. Go check them out. David, it was great talking to you, man.
Thanks,
Appreciate all your support, and looking forward to seeing you again.
Hey, thank you.
All right, guys, make sure you're subscribed. We'll see you on the next one. Peace.